As we roll into August, the stock market has been looking absolutely fantastic for the last 4 or 5 months. Ever since that dip we saw back in April, the stocks have been just roaring, earnings have been fantastic, and as Q2 earnings season starts to round down, we see that so many of our favorite companies have demolished their earnings and are up a huge amount. But anytime things are this good, the questions start to be asked. How long is this going to continue? What should I be doing with my money? Is it time for me to be selling? Well, to try to answer those questions, I want to talk about 3 interesting storylines in the Canadian market. I'm going to first talk about the gold story. What's been going on with gold? I mean, we've talked about this a couple times. Where are we at today? Then I want to talk about the Shopify story, tech. What's been going on there? Are prices too elevated? Is the AI trend going to stick around? Finally, we're going to close out with a close personal favorite of mine. We're going to talk about the oil industry and what's going on in there. And is it actually time to be buying oil stocks? Welcome to Gold Larch Investing. My name is Liam. On this channel, we talk about investing in Canada. And if that interests you at all, please do like the video and subscribe to the channel. On the screen right here beside me, I've got a year-to-date chart of the S&P TSX 60, which is the 60 biggest companies on the Toronto Stock Exchange. And on there, you can see that the stocks so far are up almost 12% this year. And that is a huge, unironically, a huge amount to be made considering the situation here in Canada. Something people don't often understand is that the Canadian stock market and the Canadian economy are not all that linked. It's not quite like the United States, where you look at US economic data and you see that immediately reflected in things like the S&P 500 and the Dow Jones. Canada's stock market's actually getting a lot of its revenues from outside of Canada. It's more dependent on specific commodities, on specific sectors. And so the sectors that have really boosted Canada's stock market this year have been gold to a large degree, materials, but also technology and specifically Shopify, considering its size. I mean, just look at how well things have gone since April. If you look at that, we were down in the 34 range and we're up in the 42 range on the TSX 60. You could have been making a huge profit just by buying at that moment. Timing market, never a great idea, but just goes to show a little bit that, well, the economic data for Canada hasn't been great this year. The investors who have invested in Canada have made out like bandits. Now, I'm going to switch over here to Agnico Eagle. We're on Seeking Alpha still here, but you see that Agniko Eagle is the perfect example of a gold mining stock. Year to date, up 73%. 73%. Remember that the overall Canadian index is up about 12, 11, let's call it. So let's say 7 times the index gains. The story in Agniko Eagle for the last couple months has been, I'm too late. The story back in March and April was, I'm too late to catch the gold rally. Story in May was certainly, I'm too late to catch the gold rally. The story as we went through June, I'm too late to catch the gold rally. And yet, as we roll through August, we're seeing all-time highs. My question here that I'm going to pose to you, the story here, is that gold just seems to defy logic. Gold and the US dollar are typically inversely correlated. That means that while the US dollar goes up, gold goes down. But with gold stocks seeming to lag the price of gold a little bit, with people being a little skeptical about how high gold is going to go, the industry has just managed to continue trucking along. On top of that, they've seen huge profits and massive plans. We've seen some expansion talked about. We've seen people selling assets while they're hot. Just so much is going on. There's so much money in these companies right now. Companies like Agnico, of course, which is a personal favorite, but we've also got big names like Barrick, that are in the industry, and you see them in the news every couple of weeks. They've either sold an asset, they've made a new plan, they're either doing a special dividend or they're doing buybacks or just bringing all of this cash and making it worth shareholders' while. It's one of the big reasons why funds specifically haven't started to sell out of these, even though we haven't seen gold go much past its range in the low to mid $3,000 area. Now, I can see gold going just about 2 ways. Gold is a commodity. It's really hard to predict. I don't think anybody would have predicted that gold is going to be $3,500 a couple of years ago. But in the next 6 months, gold is probably going to depend a little bit on how well the US economy does. By that, I mean, do the tariffs start to bite? Do we actually see a real slowdown in US GDP and US growth? Do we actually see unemployment start to raise? And do we start to see this, cutting maybe of interest rates, decreasing the value that people get out of holding US dollar bonds, right? Do we see that negative story play out? If we do, I would expect gold to not only remain elevated, but maybe continue its run. I'm not calling for $4,000 gold here, but I think it's not impossible. And so you could see another 30-40% out of an Agnico Eagle. And in that scenario, it could even be higher than that. However, if you see the opposite happen, if you see the US actually start to outperform, if you see that the Federal Reserve doesn't bow down, doesn't decide to cut interest rates, and continues to offer these great returns for investors willing to hold US dollar bonds, US dollar stays fairly strong, you see growth start to pick back up, you see all this investment that has been promised start to pay off, you see some sort of tariff story that works out well between maybe the US and China, maybe a better story between them and the EU, maybe that deal works out well for the US, maybe Canada and the US make a deal, whatever it might be, you might see that the US dollar remains strong and gold starts to peter off a little bit. In that case, I could see a stock like Agnico Eagle ending up as sort of, let's not call it dead money, but ending up range bound for the next little while as we wait to see how long that story holds and what the next trend is. Gold very rarely drops significantly. And I mean, in fairness, we've never seen it this high, but I wouldn't expect to see gold down to $2,000, but I wouldn't expect greatness from an Agnico Eagle if the US economy picks up and the US dollar remains really strong. So as an investor, the question mark is, are you going to take profits? If you've got a huge amount ready and you're looking at it as an opportunity cost moment, maybe there's other things you'd rather invest in. If you're happy to hold it there, you're waiting to see what the company does next, you believe in the expansion ideas, you believe that maybe it's going to be easier for them to expand in Canada to grow their Canadian business, maybe you don't think that it's such a missed opportunity. The next storyline here I've got is Shopify. Now, this is, I would say, emblematic of tech, but as a Canadian, it's kind of interesting because it's very much US tech. And as a Canadian investor, many of my holdings are in US tech names. I mean, my biggest individual holding is the S&P 500, of course, a huge chunk of which is the Magnificent Seven, those big American tech firms that just have global dominance and have had fantastic earnings, even with all the money they're spending on AI. If you look at the Shopify chart, you'll see that just recently, as they announced their Q2 earnings, they had one of the most impressive pops I have seen on a Canadian stock in a long time. I believe it was 22% from open to peak. And so when you see those massive jumps, questions start to be raised. Is it too late to buy Shopify? Should I be buying the stock? Is it going to crash again? Now, if you, like me, owned Shopify back in the late 2010s into the early 2020s, it was a fantastic name to hold right up until it wasn't. Shopify hit a peak of around $170. And with the shares right now trading in the $150 range up to almost $160, people are starting to question if all-time highs will be tested. I do think Shopify is an interesting story. I think the profitability story has changed a lot. I think the business itself is much stronger than it was in 2021, and it's not quite as fueled by hype, but it does have a couple of question marks. Now, if you are sitting on a huge amount of gains and you're asking, like, is it wrong to sell? I would never say it's a bad idea to take a little bit of profit. I mean, did you expect to earn an extra 20% in the last couple of days? Probably not. And it's actually quite a nice little treat. If you're stressed about this kind of holding, absolutely, it's worth maybe trimming. But I don't think the story is over yet for Shopify. I think this is going to mirror, to some degree, the success we see among other big tech names. And we've seen a lot of success from people like Meta, from people like Nvidia, of course. Even AMD is getting onto the scene. We've seen maybe a little bit less from an Apple, but we've seen some real resilience out of Google. So a lot of these big tech names have been doing really well. And one of the things that is almost uniquely true about this class of big tech stocks is that they defy valuation. As an investor who typically invests in dividend and growth stocks, when I look at something and I see a PE that is just out of this world, right? We're talking, somewhere in the high double digits. We saw Palantir 100 and something at some points. I start to sort of blink a little bit and get concerned. But we've seen a lot of those big tech stocks live up to the name. I mean, names like Meta, people were calling overvalued $300-400 ago. You had hundreds of dollars of profit still to be made when the PE was elevated. And it's all about the growth story. So I think Shopify is an ideal name to look at if you are investing in these big tech names, if you are looking for the growth and if you believe in that AI boosted run, but if you do see a significant pullback, you cannot expect Shopify to hold up super well. So if you're stressed about this name, it might be worth trimming. If you're stressed about the overall market, you think we're too bullish right now, maybe it's worth staying away. But if you're really bullish and if you think big tech is going to carry on, then this is probably an interesting thing to look at. And I mean, I'm sure you wish you could have invested 20% ago, but the next best time might be now. The third interesting storyline I want to talk about is in the Canadian oil and gas space. Now, this is something we talk about a lot here on the channel because it is very, very poorly understood by most investors. The Canadian oil and gas space hasn't really gone anywhere in the last year. Or at least it hasn't if you look at a year-to-date chart. But if you consider just how low things were looking back in April, you've seen some big moves since then. The stock I've got on the screen here is Whitecap Resources because this exemplifies the trend really well. It has actually become one of the more popular Canadian oil and gas stocks. It has become one of the stocks that people here on the channel like to talk about the most. And the story was all about merging companies, acquiring new assets, growing to become more investable. And on top of that, we also have this story of US money looking for the next big run, Canadian politicians starting to get out of the way of the industry. Overall, we are at an inflection point. There haven't been big profits made yet. You're definitely not late to the party, but if you're willing to sit for a little while, if you're willing to take that opportunity cost, right, to let your money sit on a stock that might not go anywhere for 6 months, you'll collect a great dividend. Don't get me wrong. And I can never complain. As a dividend growth investor, I can never complain about a 5-6% dividend. That is just ideal in my world as a Canadian investor where I've got all these tax advantages. I love collecting those dividends. But the stock price itself might not move for 6-12 months. But the 5 to 10 year story could be absolutely dramatic. We could be talking tens, hundreds, thousands of percent, depending on which stock you pick, what exact resource they're working on, and exactly how much of what's been promised comes true here in Canada. So if you're looking at the energy space and you've been disappointed, that's fair. If you're not willing to sit on the opportunity cost, well, you've seen stocks like Agnico and Shopify up tens of percents, what was that, 70 on Agnico, right? If you're not willing to sit on a stock like this and just let your money ride, I respect it. But if you are, and if you're willing to take maybe some of your profits from some of the high flyers and put them into some of these areas that are a little bit looked down upon by the market, I think in a year or two, we could be looking at those oil stocks up tens of hundreds of percent and thinking about whether or not people missed out by not owning those. And overall, that tells the story, I think, of the Canadian market. There are some sectors that are absolutely red hot, where people are starting to question whether or not they should be investing or they should be pulling their money. There are other sectors that have gone absolutely nowhere. It is definitely a stock picker's market right now. If you pick the right names, you're way outperforming the index. If you pick the wrong names, you are way underperforming. As always, I strongly recommend diversification. I never recommend going all into any one name or any one industry. And if you ever want to look at what exactly I own, what I invest in, check me out on Blossom Social. I have all of my investments public on there. You can see exactly what I bought, when I bought it, and what exactly I'm holding, selling, all those kind of things. Check it out. As always, if you like this video, please do like it. If you like what we do here on the channel, please do subscribe. And I hope I catch you in the next one.